Thank you, Mr. Speaker. Yes, I will bear that ruling in mind. I think it is also appropriate, however, in third reading speeches to be permitted a little bit of rebuttal, because there was a deal of misrepresentation in the previous speech that should not go unanswered. There was misrepresentation about the Labor Party's position about the inflation target under the Reserve Bank, and that needs to be dismissed. We have not at any point ever said that the inflation target should go wider. We know that inflation can have a devastating effect on the standard of living, especially for Kiwi households which are on fixed incomes and those who obviously struggle to have anything left over at the end of the week. But Mr. Speaker, to return directly to this bill, this bill is fine as far as it goes, and that is what we have said, and the previous Labor Speaker has said very eloquently. But the point is that this bill, this measure, is a measure that's designed to improve the prudential controls over the insurance sector and provide fairness and transparency and security over the supervision scheme for the benefit of policyholders. But, Mr. Speaker, it cannot go unsaid that this bill represents a lost opportunity. We are in extraordinary economic times. We have seen the collapse of economic orthodoxy. We have seen the collapse of financial institutions. We have seen the punishment of innocent people who have trusted their savings into banks and into financial houses and into economic structures on which they should have been able to rely. The financial crisis that we find ourselves in as part of the global community is not the construction of the Labor Party or the former Labor government. It is not our construction. It is an international phenomenon. The unfortunate thing about it, however, is that the New Zealand currency bobs about on the ocean of international trading in a way that disadvantages our exporters. In order to assist our economy to recover, our exporters need assistance. One of the things by which they could be assisted is altering the monetary policy and altering the kind of prudential structures that exist in the economic system. And so by taking one measure, which is this, the Insurance Prudential Supervision Bill, and taking that as one measure when others could have been employed is a lost opportunity. And it does represent a timidity, in fact I said earlier, Mr. Speaker, a cringing timidity on the part of this government, that it has not been bold enough to deal with some of the big issues to restore faith in in economic and financial structures. And all it addresses is the insurance sector in this bill. So here we have what is a reasonably good bill. It is improved, I think, by the addition of the 10-page supplementary order paper, but clearly that indicates that the Minister realised that not everything was right in the first draft of this bill. And we support the supplementary order paper. We support that. But why take baby steps in addressing and correcting financial supervision when in fact giant steps are required, quantum leaps are required, not just step changes, in this case a baby step change, but in fact quantum leaps are required if we are going to provide our exporters, who are far and away the money earners for this economy, if we're going to provide those exporters with some stability in order for them to trade profitably. And so it's good that we have security and transparency and fairness in a supervision scheme for insurance, the insurance sector, and for those policy holders within that sector. Of course, anything that protects and buffers policyholders, ordinary New Zealanders and New Zealand businesses from the vicissitudes of a fluctuating financial situation at the moment around the world is good and is worth supporting. But, Mr. Speaker, it is essential to note that this baby step will not fix the things that need fixing. This will not, and it could have, will not address the core issues at the heart of the financial and economic malaise that encompasses the world at the moment. Mr. Speaker, the heavy trade in the New Zealand dollar comes at the price of our exporters. It makes our dollar volatile. It makes it very difficult for exporters with very low margins, like most of our commodity producers, to anticipate and to roll with the punches in their trading functions. And this makes exporting a risky business. And it will take more than the Insurance Prudential Supervision Bill to fix that. This is one item of many that is being given into the hands of the Reserve Bank appropriately as an independent arbiter, appropriately to monitor and to supervise. But we on this side of the House believe, Mr. Speaker, that the Reserve Bank needs clearer legislative authority to allow it to use prudential powers to support a wider ranging monetary policy, a different mix within our monetary policy settings. And so we would address the Reserve Bank's powers and welcome the inclusion of these supervisory functions into the Reserve Bank powers, but we would have a look at other powers that the Reserve Bank ought to have, because they are hamstrung by the limitations of the tools that they have at their disposal. Of course we want inflation controlled. Of course we want stability of prices. But we also need additional measures to fix the kinds of problems and that New Zealand experiences, to take pressure off interest rates, to make our dollar a less attractive trading currency than it currently is, and to allow our exporters to flourish. We would make those changes. The Labour Party believes that we should make those changes, that this bill is in fact heading in the right direction, but it is not even the step change that the Prime Minister talks about. Not only is a step change insufficient, this represents a lost opportunity, an opportunity to do something bold, to do something that would truly make a difference to the economic direction of this country, that would support our exporters, that would enable interest rates to be set at and to arrive at levels which are manageable, that would increase capital flows into exporters. Providing prudential supervision over the insurance sector is good and we will support